guys, it's Stock Curry, and today we're going to talk about the earnings that are upcoming this week. We're going to talk about the upcoming economic data coming out on Tuesday. We're also going to talk about the bond markets and how that affects the stock market, and I also have some great stock picks for you. So let's get into it. Okay, let's start with earnings. Now this week is all about the S&P. Next week will be all about the NASDAQ. So for this week, pretty much every major sector in the S&P is reporting earnings. So far, a lot of companies have beat earnings expectations, but their outlooks have been lower as growth from the pandemic reopening slows down. As a result, even though companies are beating earnings expectations, their share prices are actually going down. Now, investment bankers are expecting more profit taking on large cap stocks this week as earning expectations meet, but the guidance fails to exceed expectations. And also a quick correction from a video on Friday, Netflix is reporting on this Tuesday, not next Tuesday. Okay, now regarding economic data, there's no real big economic data coming out this week. The focus is really going to be on earnings. The only thing we have coming out is a new housing starts report on Tuesday, and that might affect some housing stocks, some home builder stocks such as LGIH, LEN, DHI, PHM, TOL, and KBH. Now, the last thing I want to talk about today is the bond markets. The bond markets, and specifically the 10-year Treasury yield, are often good indicators of where the stock market will go from here. The 10-year Treasury yield has been dropping despite the fact that the Fed is expected to raise interest rates. Now, that might signal that the bond markets are expecting a worse than expected recovery from the pandemic. It could be bad for the stock market overall, but it could also be good for high growth stocks if interest rates don't get raised like they're expected to. Now, this could signal that high growth stocks could go up while the overall market goes down. There's no guarantees though, because this could just be a fluke and the 10-year Treasury yield could start rising again like people really expect it to. But if it doesn't rise, this could be a huge warning that the growth and the reopening from the pandemic is just not going as well as expected. Okay, let's get into our stock picks for today. Now, for those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. Every day, I watch hours of videos from the top 10 YouTubers, and then I consolidate all of their stock picks into a single video where I give you the cliff notes on their stock picks, as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified when I release my next video. And if you're watching this on Facebook, go ahead and follow the page also. In fact, I'll give you 5 seconds to do that right now. Alright, before we get to today's stock picks, I just want to remind everyone that I am not a financial advisor, and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. Now, it does look like we're going to have another red day on Monday. Not only are the Asian markets red, but in addition to that, the US futures are red as well. So I do expect another red day on Monday. All right, let's get into today's stock picks. First up is BHTG. This is BioHitech. They're a waste management company that uses municipal waste to generate renewable fuel. They also have a data analytics service which helps municipalities track recycling activities. And they also have an affordable biological digester system which reduces food waste. Their customers include healthcare facilities, schools, cruise lines, and city governments. Their food waste digesters are popular with cruise lines that have limited waste storage on board cruise ships, and therefore use BHTG's food digesters to reduce the amount of waste they need to store between ports. They just received a $2 million contract from Carnival Cruise Lines and Princess Cruises in January, and then they received an additional $1.8 million contract from Carnival Cruise Lines in March. Revenue has grown significantly over the past few quarters, with Q4 revenue up 148% year over year, and Q1 revenue up 123% year over year. Annually, revenues have consistently risen every single year. This is a penny stock though, so it does not come without risks. For one, this company is still not profitable. For two, they continue to do share offerings every quarter, which is hurting their share price. They are low on cash and will need to do more share offerings in the future. In the long run though, this company should perform well. A 5-star rated analyst gave BHTG a 1-year price target of $4 just 18 days ago. That represents a 177% upside potential from Friday's closing price. Now, this is a NASDAQ listed penny stock, so you can buy this on either Webull or Interactive Brokers, whichever you prefer. I have links to both of those in the description of this video. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV manufacturer. CCIV has set this Thursday, July 22nd, as the official shareholder vote date for the merger with Lucid Motors. Once the vote is approved, the merger should happen the next day on Friday. So please don't forget to vote if you are a shareholder. StockMo thinks CCIV will get up to $30 to $40 by the end of this year. StockMo pointed out that over the past month, CCIV is only down about 2%, so it is performing much better than a lot of other EV stocks. Both StockMo and I hold January 2023 LEAP call options on CCIV, which we both expect to perform very well. Next up is CHPT. This is ChargePoint. They are the largest charging station company in North America with 73% of the total market share. CHPT is down 37% in the last 3 weeks. It is now oversold with the candles below the 300-day EMA and the RSI right at oversold. Now is a great time to buy CHPT. I am so confident that CHPT is at the bottom that I am considering some call options on CHPT. StockMo is also considering buying LEAP call options on CHPT. Call options can make you more money than just buying the stock, but they are also riskier because you can easily lose your entire investment if the underlying security does not have a massive move to the upside. The average analyst 1-year price target is $39.50, which represents a 72% upside potential on CHPT. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo said he is not concerned about this most recent pullback. NIO had run up over 70% in just 6 weeks and needed to cool off a little bit. NIO has now dropped about 20% from the most recent highs, but it is still up 40% from the May lows. And it looks like NIO might have found a bottom here at the 100-day EMA. We don't have any signs of a rebound yet though, so we'll have to see if NIO can in fact start going back up this week or if it drops further. In the long run, NIO remains a great stock to own. NIO is expanding into Europe and will soon expand into the United States. That expansion should help NIO's stock price to continue to climb over time. The average analyst 1-year price target is $65.67, which represents a 53% upside potential from Friday's closing price. Next up is NKE. This is Nike. The traveling trader is considering opening a bearish put spread on NKE. NKE has been overbought for the past few weeks. NKE is now about to turn bearish on the MACD. The MACD histogram is about to turn red, and the MACD is about to form a death cross. The RSI is also dropping. It's hard to say how low NKE will go, but the 200-day EMA is at $133 and seems most likely given the fact that NKE has a history of dropping down to the 200-day EMA, and also the fact that dropping down to the 200-day EMA would close the gap that was created at the end of June. Since we don't know how low NKE will go, but we are fairly confident that NKE will drop, both the traveling trader and I recommend a bearish vertical spread that will make money whether NKE trades flat, goes down a little, or goes down a lot. If you want to just buy a put option, you can, but keep in mind that you will only make money if NKE drops a lot. So your chances of making money with a put option are lower than if you do a bearish vertical spread. The best bear put spread I found was buying the August 20th $145/$150 vertical put spread. With this spread, so long as NKE drops below $149 by August 20th, you will make money on this play. If NKE closes above $150, you will lose $54. But if it closes below $145, you will make $446. So you are risking $54 for the chance to make $446. That seems like an incredible deal to me. $145 is at the 50-day EMA, and like I said, it's very possible that NKE will drop down to the 200-day EMA at $133. That said, if you buy this put spread and NKE drops down to $145 sooner than expected, say within a week or two, then I would close out the position and take profits. You'll probably be up 200% at that point. I would not get greedy. I would just take the $100 or so profits and close out the position. The reason is because once NKE corrects, it will most likely climb back up again. So I will give you a $145 price target with this short-term bearish play. Next up is PLTR. This is Palantir, and they're a data analytics company. Chris Zane gave a $20 buy-enter price and an $18 ideal buy-in price. I personally don't think it will get that low, but it might. For one, PLTR is at a strong level of support. For two, the RSI is nearly oversold right now. And for three, the MACD histogram is rising. All three of those indicate that PLTR is at the bottom and will start rebounding from here. However, there could be significant selling pressure if some bad news comes out, or if a short seller jumps on with a short report hit piece or something like that. In the event some negative catalyst comes along, then it's possible that PLTR might drop down to the 300-day EMA at around $20. But by that point, PLTR will be significantly oversold. So I really don't think PLTR will drop below $20. All of that said, I will reiterate my buy-enter price of $24, my ideal buy-in price of $21, and my stop-loss price of $19. Next up is QQQ. This is an index ETF for the NASDAQ 100. You guys know that I bought a put option on QQQ to take advantage of the short-term correction that I see coming. The traveling trader did the same, although he bought a put option on SPY, which is an ETF that tracks the S&P. Now that QQQ is having a pullback, let's talk about when you might want to buy back in for a long position. I do not expect QQQ to drop below the 100-day EMA. In prior pullbacks, both in corrections and near corrections, QQQ tends to bounce off of the 100-day EMA. I do not think we're going to get a market crash yet. I don't think that will happen until September at the earliest, and it might not even happen until next year. But I do think that we are seeing a small correction or near correction right now. That is backed up by the fact that QQQ was overbought, and the fact that the MACD just turned bearish, and the fact that the MACD just had a death cross, and the fact that the RSI is dropping, and the fact that the candles just closed below the 10-day EMA for the first time since early June. Now, once this mini correction is over, you might want to consider going long to catch the rebound. The traveling trader really likes buying QQQ for a long-term hold once it hits the 100-day EMA at around $335. And I agree. And if you are a risk taker and want to potentially see greater profits, but also potentially see greater losses, then you can buy TQQQ, which is a 3 times leveraged ETF for the NASDAQ. Meaning TQQQ will rise 3 times as fast as QQQ in a bull market. Just be careful though, because TQQQ will also drop 3 times as fast as QQQ in a bear market. Next up is SESN. This is Sensen Bio. They're a pharmaceutical company focused on cancer treatment, not to be confused with SENS. The traveling trader likes SESN because they have FDA approval for one of their drugs coming up on August 18th, or about 1 month from today. The traveling trader expects SESN to rise going into that possible FDA approval. SESN dropped over the past 3 weeks, but has since found support at the 50-day EMA. It's not oversold on the RSI though, so SESN could continue dropping further. You might want to consider dollar cost averaging again starting at the current price. I like SESN as they buy the hype, sell the news events. Although the traveling trader sincerely feels like SESN will get FDA approval. So if you feel lucky, you could also keep SESN through the approval. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Tom Nash let us know that TSLA just announced that they will be offering full self-driving to Tesla owners for a subscription of $200 per month. That will allow TSLA to generate revenue through a software as service or SaaS solution, which means TSLA will be generating monthly revenue on their vehicles long after the vehicles are sold. Now, Tom Nash did point out that this is not quite full self-driving yet. It's just an advanced form of assisted driving. Regardless, Tom Nash also pointed out that if 10% of Tesla owners opt to pay the $200 per month, then TSLA will generate an additional $500 million per year in revenue. As Stockmo pointed out, TSLA is up 3% over the past month, making it the only EV company that is up over the past month. And now that TSLA has announced their full self-driving feature, I do expect TSLA to rise on Monday. TSLA closed very close to the long-term trend line on Friday, so there's a good chance that Friday was the bottom for TSLA's most recent pullback. Now, the average analyst one-year price target on TSLA is only $766.50, which represents a 19% downside from Friday's closing price. But this is where paying for access to the individual analyst rankings is helpful. If we scroll down here to the individual analyst rankings over the past month, we can see that one analyst rated TSLA a sell with a ridiculous $180 price target. Now, since I have access to all of the individual price targets, I can filter out that one price target. And when I do, we get an average analyst one-year price target of $842. And $842 represents a 30% upside potential from Friday's closing price. Now, you can see how just one outlying price target messes up the average, and that is why it's helpful to pay for access to the full data. By the way, if you want access to tip ranks, I have a link for it in the description of this video. And last, let's talk about XPEV. This is XPeng, and they're a Chinese EV manufacturer. Chris Zane gave a buy-under price of $36 and an ideal buy-in price of $34 in XPEV. It might drop that low, but I don't think it's likely. XPEV is already rising on the MACD histogram, and it looks like XPEV bounced off of the 100-day EMA and is now rising back up. I would be comfortable buying XPEV here at the current price. I will reiterate my $39 buy-under price and my $35 ideal buy-in price on XPEV. Also, I just wanted to explain something that Chris Zane said in his video that he uploaded Sunday night. Chris Zane showed how on Friday you could have bought XPEV here at around 10:10 a.m. and then sold at around 10:35 a.m. for a quick 3% profit. He called this a swing trade. Now let me clarify a couple of things. Number one, this is not a swing trade, this is a day trade. Number two, you can never perfectly time the top and bottom of any play. Number three, in order for any day trade to be effective, you need to have a good understanding of technical analysis. Chris Zane did not cover any technical analysis when he discussed this play. All he did was show the chart from Friday and show you how you theoretically could have made money if you had perfectly timed the bottom and perfectly timed the top. That will never happen in the real world. Please do not have false expectations of potential profits. And please don't feel bad if you fail to perfectly time the top and bottom of your plays. Nobody in the world perfectly times the market. So just know that Chris Zane's example was ridiculous and not at all realistic. Don't compare your performance to an example like that. Just know why you are buying before you buy and know when you are going to sell before you buy. Then stick to your strategy and execute it. You don't have to get it right every play. You only have to be right 60% of the time to make money in the stock market. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. You can sign up for Interactive Brokers using my link in the description or first comment below. Interactive Brokers is a great broker. They have highly discounted trading. They have commission-free trading in the United States and highly discounted trading everywhere else in the world, with commissions starting at just $1 Canadian, 4 euros, or $6 Australian, depending upon where you live. And both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. Eastern all the way till 8 p.m. Eastern. Now, I do have material connections with both Webull and Interactive Brokers, so when you sign up using my link in the description below, not only are you getting a great broker to trade with, you're also helping me to continue to provide these great videos for you. Now, finally, don't forget to hit that like button, subscribe, click the bell icon, and follow the page if you haven't already. I hope you have a ton of success trading, and I will see you tomorrow.